So why stocks are durians? When we look at the stock market or equities, if you compare them to other asset classes, okay, what has generated the best return over time? Way back in $100 of stocks, way back in 1970, within what 53 years, stocks has generated you 22,419. So the first lesson that I wanted to share is this thing called rule number one style investing. Now, rule number one, popularized by a few people. I think Buffett was one of them. Rule number one is don't lose money. Rule number two means don't forget rule number one. So if you want to practice rule number one kind of investing, this is the checklist you have to go through. If you follow this, you likely come across this company. The share price return is 31% over the past 10 years. But if you KEGA it out or compound it out over 10 years, you actually made 2.8 lah. You're taking a risk because you have to put it into the stock market. You might lose your capital. So if you look at it, numbers are good. So this is the debt, virtually negligible. You won't worry this company go bankrupt. But here's the question. When you invest, are you investing using hindsight? I would liken that to rear view mirror versus windscreen. Actually, when you look only on the P&L, the balance sheet, everything is actually a rear view mirror. The only way you can say that you're looking at both is you do a forward projection. Investing is really about the future. When we look at a P&L statement or financial statement, we are usually looking about reported numbers in the past. When you want to buy a stock, you're trying to buy a $1 stock hoping that it will be $5 or $10 in the future. So lesson number two, really invest for the future, not for the past. What you really need to do is read beyond the revenue. You need to read widely. So here's the dilemma of a retail investor. First dilemma, most investors, especially retail investors, they don't invest for the next 10 years, right? They're invested for tomorrow. But stocks don't behave that way. The whole point is here today is how do I find quality stocks? Time in the market is much, much better than timing the market. So the longer you hold the time in the market, this is actually what gives you the results. Here's the second dilemma. If it's a $1 stock, can I bargain for 50 cents? If you look at what do you call it, quality, right? There's no harm to go for the 7. Definitely no harm. But is this something that will appreciate in price? Here's my next hypothesis. When you are investing, you're in a marathon race. And in a marathon race, you better make sure the tool can actually last the whole thing. If you look at the Magnificent 7 versus the S&P, the S&P is made out of 500 companies. And out of these 500 companies, if you look at the S&P return, it's roughly about 30%. 493 of these companies only gave you a return, 20% return. But if you pick the best 7, these guys would have given you 60+% return. And their weightage contributed quite a big portion. So dilemma number 2, the true breads looks expensive. The hint to you is this. The lesson here is don't just look at PE. There's many, many other criteria to look at. Okay. When you look through for true breads versus ponies, right? One key factor you should look at is this thing called gross margins. And why is it important is because high gross margins indicate pricing power. Next criteria, when you look at the market size for Maybank, it is the biggest company by market cap in Malaysia. So grow regionally, it already proved my point. Indonesia is flat. Singapore is flat. 10 years, If you look and you take that analogy and you look at the KCLau, it has not moved much. But if you look at the index that we have in the US, which is the S&P 500, Microsoft in 2012 was 2 billion. Okay, in 2024, 12 years later, it has grown 623 times to 2.8 trillion. True breads have a large addressable market. So there's many, many other things that true breads will have. You've got a lot of moats around it. So here's the third dilemma. If I were to look at one stock, the research I can humbly tell you is roughly between 30 to 40 hours per stock. Per industry, usually if you're very fast, if you're a sell-side analyst, you do this full-time, you probably get a gist of it within 1-2 months. Do you actually have time to dig and to do this research on your own?